All right, let's get the show on the road. So we did get the inflation report today. Let me know how that volume is. If you are live, make sure it's coming in pretty clear. So we got the inflation report, and so far it was pretty bad, right? It was not too bad, but a lot of people are freaking out. Why? Because core inflation month over month, which is our short-term momentum gauge, came in a tenth, 1/10 higher than expected. Okay. Core inflation, core, right? Minus food, minus energy. The long-term trend came in 2/10 hotter than expected. Ouch. I think that was a little more painful than the 1/10. And then the inflation altogether, you add energy, you add food, we came in at 1/10 higher. These are all higher than expected, right? All higher than expected inflation report. But okay, but it's not that bad. And we're going to go over why. First off, the market already saw this coming. I think the market saw this coming, which is why we didn't see a tremendous drop off. I know we're falling off now. We're going to hit the technicals intraday, but let's take a look at this. First off, supply chains, right? If we look at the supply chains, they told us that we were going to get higher prices. The ISM, prices paid indicator, told us, hey, we're going to be higher. Why? Because the Red Sea conflict, the spike, which we warned about last week, the spike that came in, right, for container shipping prices, well, it spiked. It spiked and it showed up in the supply chain, the ISM manufacturing and the ISM prices paid. Those are your forward-looking indicators. Those are your, what is it? Uh, Crystal balls. Those are your crystal balls right there. We saw forward-looking that prices would be higher. We hope they weren't. If you're long the market, if you're short, you were glad, and they spiked and they came up, right? So we kind of saw it coming to some degree. We should have known better. Service inflation. This is the bad part, right? This is the negative part of inflation that is very stubborn. The services X housing. We all know housing is lagging. Rents are lagging. They should continue to come down as far as the rate of change, right? The rate of change is coming down, not the absolute price. Housing prices always go up, but they're going to go up a lot more slowly. But if you take out housing and we're looking at just services, okay, the top half is the trend, the overall trend. You can see it starting to trend back up. Not good. This is probably the scariest part of the report from my view. On the bottom side, the monthly momentum picked up significantly. This was the highest in a long time, right? Let's say since 2022, big impulse, big momentum impulse on services. But again, if we go back, it's coming from the container ship. It's coming from transportation, right? Transportation services is the spike. That is the issue. So we know what the issue is. That's good. We can track it. We can look at oil prices. We can look at container shipping prices. It's all about transportation. We want lower oil prices, but we'll get what we take. But as long as we can see where it's coming from, that's the good part. Now, going on to rate cuts, right? How does this push rates forward? Well, the market currently, which we will do the technicals, is pushing the rate cuts back. We're pushing those rate cuts back a little further. So if we look back to June, okay, before we were looking at a rate cut. This is higher for longer in June, right? We're just going to look at June here. We're going to look at the start of the summer. The rate cuts are no longer being priced in March, no longer in May. Now we're looking at June. June has the highest probability. Well, for the nearest month is June for a cut, 53%. So about half, the market is pricing in 50% chance of a cut, at least one cut in June. Okay, higher for longer, 25% or 22% higher for longer in June. We're pushing them back. No rate cuts, right? We have to now the market has to price in. Okay, we're not going to get an easing of financial conditions. So you might look over to the 10-year rates. Those are tightening at the moment. The dollar's tightening at the moment. This is a risk off period. But in general, the highest probability right now is a rate cut in June. And we got to keep track of this to see, is that going to move backwards even further as we go? Or is it going to pull back in and where we see two cuts start to rise, where the probability of two cuts start to rise? Right now, we're looking at a rate cut in June, in the summertime. So the market's going to be pricing out or pushing back the rate cut all the way till June, unless we get some, different data. But this also suggests that growth is hotter or stronger than expected, which we talked about the business cycle. It is actually stronger than expected. Let's move over to the charts. And we will take a look at where we might land here. What up, volume? Good. All right, thank you, Tigger Media. Appreciate it on the volume. So let's take a look at the charts. All right, and we're gonna just strip this down. We're looking at the 45-minute chart here, and what I wanted to show, this is what I was looking at. This is SPY, okay, S&P 500 index. ETF. A lot of people, look at this. It's probably the most traded other than, the Qs and Tesla, but it's our barometer for the overall market. It's been trending vertical, very vertical, right? This was the big Santa Claus rally. We're still pretty vertical here. We did say yesterday or last week, hey, we're getting a little over positioned here. We're getting, we're getting steep, and it's going to be a lot easier for something to knock us over. Well, it was a higher than expected inflation report, but in general, and I want to make sure we keep this in mind, in general, the trend of inflation is lower. Okay, so we are pulling back, and we're gonna do some more technicals on that, but the trend is lower. Okay, let's take a look at it. Overall, yes, higher than expected, but the trend is still making progress to the downside, right? And this is just the overall inflation rate, including energy. Now, what I think is going on here is we're not getting the immaculate disinflation no more. This changed it. It's now telling us, inflation is now telling us it might be stickier than was previously expected. So this is the sticky part. If we look at core, you can see it moving sideways. If it doesn't fall over the next couple months, this is not going to be good, right? And it's not going to be terrible for necessarily the S&P 500 companies, but the overall economy is going to struggle because the Fed cannot relieve the stress of inflation. It cannot relieve the commercial real estate issues that we are seeing. We're already seeing New York Community Bank have some issues. I bet you there's more issues down the pipeline when it comes to commercial real estate. So we're looking sticky, not reacceleration. I know people are saying reacceleration inflation. No, 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 no. Supply chains are back. Okay. Supply chains are still strong. We're just having a Red Sea issue. If that does continue to accelerate, then we can expect inflation to stay stickier or maybe reaccelerate. But for now, we're sticky. We are looking at sticky inflation, right? That can change next month also, because next month's going to be February's inflation data, and I think people are starting to slow down. We expected the slowdown in January, didn't come. Now it's February, Super Bowl's over. Now maybe people will slow down when it comes to spending. Maybe they won't. But either way, I think there's some more issues down the pipeline. So if we do look at the and this is what I wanted to kind of key on, the inflation rate for food. Where is it at? Food inflation. Okay, just so you understand, the trend is still down. Okay, we're not getting upwards. The trend for food is still down. The trend for energy is still down. Okay, it's kind of crumbling around. It's not completely straight down. You don't want deflation, but it is down. So there's progress. So we are looking at sticky inflation. Let's flip back to the charts. Okay, we are looking at a stickier inflation at this moment. And that means also that the economy is pretty strong. We see the business cycle starting to pick up. So for the S&P, back to it. Actually, let me answer some of these questions or hit some of your guys' comments. Welcome to the bear market, says, let me make sure I don't miss anything else. Welcome to the bear market. I don't know about a bear market. We are at all-time highs. So we're still at all-time highs. That's not a bear market. A bear market would be a correction of 20%, right? Negative minus 20% would be the correction. We're nowhere near there yet. We're just having a small, I mean, what correction is this? 1%? Oh, 2.5. Okay. Let's say if we go to 5% correction, we're down here. This is a normal correction. If we come back to 477, here's your all-time high. I think we're headed for the all-time high at some point. Maybe it's NVIDIA earnings. I don't know. But we want to keep track of the levels we can see. Now, I like to do anchored VWAP and see, okay, the last low, where are we when it comes to volume? We dropped that level this morning. Okay, we dropped that level. We bounced on it initially, then we started to roll over. So anchor VWAP at that point is not there. Let's go back to the last higher low. Okay, so maybe this is our next target. And actually, I know it's kind of hard to see here. Let's turn this white. Let's make this white so it's a little easier to see, maybe a little thicker. There we go. So that's our anchored VWAP. And this level looks like we're looking at what? 490 to 489. Okay, that's our next volume weighted average. If we go back a little further, and I just want to give you a couple points where we could pull back into. Here we are. Now we still have NVIDIA earnings, I believe, on the 21st, in about a week from now. There's two scenarios that I see happening here. The market continues to sell off, and it's selling off because people are taking profits. We've seen NVIDIA, we've seen SMCI, we see the semiconductors, right? A lot of the semis, a lot of the cybersecurity go completely vertical. ARM, are you kidding me? So we need a relief. There needs to be some type of relief, right? There's a lot of buying, and now it's time to collect profits. I don't think, the market is still, the trend is still very strong. We'll draw the trend here, but here's your volume weighted average. We'll see if we can find some support at those levels. All right. But going back to the trend, okay, yeah, this is pretty much the trend. I think I'm looking at the 40-minute chart, 45-minute chart. It's just a little easier to see. Okay, here's your first trend, right? And that kind of aligns. That kind of aligns right there. This is your all-time high. This is what I'm looking at, all-time high. I think we sink down here. This is a very strong market. Okay, it's a very strong market. A lot of fund managers, a lot of investors still want to get a hold of stocks. Stocks are definitely in demand, for sure. And here's the trend that just broke, right? This is the break of trend that we got just a couple minutes ago, really. Well, about 30 minutes ago, 45 minutes ago, maybe it was about an hour ago, but we did roll over from that level. We could not hold that level. So I'm thinking we come back in. I mean, it's not a gap fill. We did fill this gap, but we're coming lower. We'll see if we can connect here. If not, the all-time high. I'm guessing I would bet that the best spot is going to be this all-time high. That's typically it. I think we talked about this last week. It'd be a lot healthier if we came back to the all-time high, found some support, previous support, right? Previous resistance, previous support. We got a couple levels of support there. And dropping a social. I appreciate it, Jervine. Hope everything's going well with you guys. I know I'm still working on some stuff in the background, and just wanted to do an update on the inflation report because this is the big pivot. I think we're at the big pivot here. One of the big pivots. Nvidia's earnings, I think, will be the next big pivot. So scenario, we come down, Nvidia earnings come out, and then we just start going higher again, right? Or we do bounce earlier, then we get Nvidia earnings, and then we roll over. So those are the two scenarios I'm thinking of at the moment. There's no clarity yet because we just had that report. Now, to make it a lot more clear, right? Let's zoom out. Let's do a little bit of zoom out, and then let's throw on the where's my SMAs? How did those get? Somebody got rid of them? Come on, how did that happen? Simple moving averages. I guess I lost them. Let's throw on the simple moving average. I wonder how that disappeared. We'll throw on the 10, 50. Yeah, we'll just throw this on. This is going to be random. I'm going to turn off. This is not my style, how I have it set up, but we'll figure this out. Oh, these are no, these are moving averages. Okay. Let's do the 10, the 50. Let's just do the 10 and the 50. This should be the 10 and the 50 right here. All right. And I don't like those colors. Let's brighten this up a little bit. There we go. Let's turn this one yellow. All right. 10 and the 50. Moving averages. All right. So the 10, we dropped the 10. Maybe we're coming back for the 50. By the time that we consolidate, this 50 should be up at the all-time high. So I'm thinking 482 or 480 is that next support level for SPY. SPX is going to look a little different. The Qs are going to look a little different also. And okay, yeah, let me get to some of your comments. So first, Jerome will say hikes possible. Okay, too cool inflation, 10% correction. Let's see where 10% would get us. 10% is going to take us, whoa, that's going to take us pretty deep. 10% will take us down to about 450, right? That would be, I mean, that's pretty deep. I think you would have to have a lot of things go wrong for a 10% correction. That was about the same range as last time. A lot of things go wrong because right now the business cycle is picking up. Employment is still pretty strong. Wage growth is still, I think, at the highest level it's been in a while. So growth is strong, okay? And we should get a little slowdown in growth come the next couple of reports because employment momentum payrolls are strong. So those will slow down. They're not going to just keep accelerating at that pace, and that should ease rates. Now, your real crystal balls here, obviously, we always talk about this, the real crystal ball. Actually, I want to see that weekly 10 EMA, see if we dropped it yet. This is our weekly, our 10-day, our 10 weekly moving average. Okay, it's right in line with that all-time high, right? I guess it's a little above the all-time high, but SPX is about right there. So 480, I think, is our target. I think you're looking at 480 maybe over the next couple of weeks. We'll see if NVIDIA, I think NVIDIA is the turning point because you have most of the earnings in the bag at that point. Okay. So that's what I'm looking for. Now, The macro forces are the keys here. The macro forces is the keys. I'm going to go over this. Let me hit some of these on TikTok, and then we'll hit the macro forces. When inflation increases, why does DXY go higher? Because that's a good question. I'm actually going to get into that at the moment. So inflation goes higher. So what happens is there's, if inflation's up, that's also a sign of growth. That means growth is reaccelerating. Now, to be better, if you had disinflationary growth, where growth is moving up and inflation is moving sideways or lower, but this is kind of a transition between growth and reacceleration growth, which would be called reflation, right? We might be seeing reflation. Now, if inflation comes back, what happens is all the bondholders, they get rid of bonds, right? Bonds start to sell off. Bonds are a safe haven, but bonds cannot perform in an inflationary environment. Remember this concept. If inflation is high, bonds cannot perform because inflation is eating up all the gains, and all the gains are going to be inside of the equity market. They're going to be inside of growth. Bonds are, you're making money off the government, basically buying US treasuries, because there is no growth. But if you're seeing growth in Nvidia, Apple, Amazon, right, big tech, whatever it is, the Mag 7 still outperforming, even though they said they couldn't, then you're not going to want bonds. And that's what's happening, is that inflation is making its way back. Bonds are starting to sell off a bit. So what's inversely correlated to bonds is rates, interest rates, bond market rates, and they just blew up. We talked about this. We have this resistance drawn for a reason. Okay. And I'm getting to that guy's question. Well, we exploded past that rate. And I think this there was an indecision. There was a lot of indecision earlier. And let me show you. This was the inflation report. Boom. Big explosion in rates. That is a big sell-off in US bonds. And actually, let me take myself out of here so you guys don't have to see me talking on YouTube, because it's kind of in the way. And then let me get this chart a little bigger. Hopefully it fits. Kind of hard to fit all you guys. There we go. So we had bonds. There we go. That's a lot better. That's a lot better. Let's get a little more relaxed here. All right. So we had bonds explode when inflation came out. Why? Because higher than expected inflation. The trend is not moving up, but the expectation for inflation, scared people, spooked them. The algos kick in, boom. Big sell off in bonds, big upside in rates. Well, if rates are higher, what does that do? That is interest rates collected on US cash. So if interest rates if you're going to get paid more for cash, guess what goes up? US dollar. Let me move this over. So the dollar also goes up at the same time, right? Because the dollar is more valuable if interest rates are higher. If interest rates are higher, you get paid more on your US dollars. That's why people are piled into money market funds, because if there was a huge reflation risk, the dollar's your best asset. Rates go back up or they stick where they're at and you get paid 5%. This isn't for the average person, but in general, big institutions putting in, $100 million, they're going to yield a lot off of that while stocks start to sell off. So this is the key here, is the dollar and the bond yields, and they decided to break out. So for me, we're looking at risk off. This is a risk off environment at the moment. Sure, some stocks can still go higher, but until this slows down, we're looking at risk off. We actually broke the last trend. Now we're headed for 105, 105 we're headed for, right? Stocks don't do well when the dollar is up like this. So that's why you're getting that. So rates, and I look at the 10-year rates and the dollar. Now the upside here is oil is not really breaking out. This is the next macro risk, which is, our energy price is going to explode again, right? We don't want to see this happen. This is going to come down to the Red Sea. This is why I pointed out the biggest risk is the Red Sea expansion, right? Or the expansion of the war in a sense that actually triggers transportation costs going up, because you can't really slow this down. You have to increase rate hikes. You're going to go into recession no matter what. So as long as oil can stay below the, what is this, $80, the market can still move up because there's no real inflation risk. Inflation did not move up materially. It just was higher than expected, right? But the dollar's giving you risk on, risk off signal here. The dollar and interest rates blew up past the level, right? That's going to take down valuations because that's the cost of money. And the dollar also broke out. That's just a pure risk off move into US dollars because of the risks of the Red Sea, because of the risk of energy prices coming back up, and because of the risk that, hey, I'm going to cover on my stocks. They're up too much. Hopefully that makes sense. I played calls on support Franco, what up, Franco? You played calls on support. Always wait for confirmation. Please don't play calls. What price is that third circle you draw on? Okay, I'll get back to your guys' comments. I wanted to explain that. I think you're talking about S&P. That third circle. So somebody asked about that third circle. This is the previous support. That's all it is. The previous support, it's kind of aligned with our anchored VWAP, right? Anchored VWAP's a little higher, but this is where I'd say our next support line is going to be and we can go ahead and get rid of this. I think our next support is going to be right here. Right? That's not exactly the all-time high for SPY, but I think it might be for SPX. Let's see what SPX looks like. I think this is all-time high. No, I guess we're a little off. Okay. So this is the bottom of all-time high, and there's a gap between the all-time high and the last support. So if you're looking at SPX, we're talking 480. What are we talking? 4840, 4840, 48.4, whatever, right? Somewhere around there. That last support. That's what we're looking at. That's our last place where the bulls really started to step in again. Is that enough? Is that enough room? Possibly, because that would be a nice 3.5% correction. If we go to the all-time high, we're talking 4.5%. So that's what I was pointing out there. That third circle. I pray for you guys that are so many big orders to the downside. Yeah, there's a lot of algos. There's still a lot of demand for stocks. Well, why? Big buy gold last half hour. Market needs to drip down. Yeah, look at the market was over positioned. Sentiment was, sentiment is extremely strong for the stock market, which is good. So we have strong sentiment, not stock market, for the economy. The economy sentiment is actually better than the stock market at the moment. So the economy is doing better, right? As far as the data goes, but you're overinflated on the stock market. We needed a relief rally and we got it. So now it's going to be, I would not hold the short to the downside just because there's definitely a lot of demand. Anything can happen. You can have a lot of relief happen somewhere. Maybe the dollar comes back down, but people are going to short intraday. People are going to get short for sure because now the momentum is starting to take off. Let's look at the RSI. The RSI also told us that we're looking at a bearish divergence. Oh, that looks terrible. All right, we'll keep it there. Bearish divergence. So you had the RSI here, right? And it's kind of sideways to lower, right? While the price at that same time period was up. So this was a bearish divergence and it played out. It came down. We're getting that relief. Now it's okay. Where do we support? Maybe down here on the RSI. So RSI is not a line of support. You want to look at the actual support here. And if we're looking at SPX, this is what you're looking at, right? 48, whatever. But let's go back to SPY. Let's go to SPY. Same thing. Anchored VWAP. We'll take that off again. They can't control inflation. Inflation is up because wages are up. That's actually a good point. Wage growth did tick up. So that's going to be more economic pressure to the upside, which is why inflation is now set to be a little stickier than it was before. But the stock market can still move higher as long as inflation doesn't tick up. Remember, inflation is still falling. It's not reaccelerating. It's falling, but not at the pace that economists projected. It's just not falling at the pace that was projected, but it's still falling, right? It's still falling overall. Typically, the market, being at all-time highs, that's a lot of pressure to the upside. What else we got? And then we're going to go over some charts also. I'm going to go over some of these big charts to see where there's major support. Market needs to drip down. I have been short for 8. You've been short for 8 weeks, so you've been getting ripped up, huh? I mean, because 8 weeks, we've been going straight up for eight weeks, bro. Okay. A lot of people were short. And I we talked about the melt up because earnings came out better. Now, I want to make one thing clear. There is a forward-looking indicator on the last video. We talked about it. ISM. Okay. ISM new orders. New orders are your forward-looking growth data. New orders are starting to move positive for the first time in 18 months. They're moving forward. They're moving positive. And inventories are they're falling at the same time. That is an impulse of expansion, margin expansion for stocks. So there's a high demand for stocks. So this pullback is going to get bought up. unless something materially goes wrong, unless you know, unless the Red Sea accelerates, this is going higher. Okay. At the moment, you want the dollar to slow down, you want the yields to slow down. You want bond yields to slow down because now they're bursting higher. So where's our next resistance here? We got to redraw this. Okay. And maybe, maybe we're here. I don't know. I'd say the next big one. I don't want to, I'm kind of biased. Obviously, I don't want rates to go up. So I'm a little biased. But let's say we can go back to 4.5 and a half. I would wait for S&P to find support. Okay. And I'd wait for rates to make a bigger move. And rates making a bigger move is basically bonds starting to sell off. Watch TLT. Okay. So TLT, where's the support? This thing just dropped tremendously, right? We thought we are going to get that support. It didn't happen because inflation is stronger and the Fed had to move their cuts. We were thinking March. Now we're looking at May. Nope, not May. Now we're looking at June. So rate cuts are coming back. Maybe this is our next support for bonds, 91. We'll see. We don't know, but we're just going to pay attention here. So we're looking at 91 for bonds, but I am telling you guys, watch the macro forces. This always gives you a heads up of what's happening. We're above the level. We're breaking out. So don't be chasing support for the S&P or for the Qs. Wait for the dollar to start to roll over again. Right now, it's back in an uptrend. This is not really good. This is not really good. Bitcoin is going to slow down because of this. Crypto is going to slow down because of this. Now, yes, there's other fundamental catalysts, but you want more variables in your favor. And right now, interest rates are not in your favor. The dollar is not in your favor, right? Earnings are in your favor. The economy is in your favor. So just wait for things to uh, start to shorten out a little bit. I see dollar moving higher, my friend. Okay, yeah. Shorting is roasting. Dollar has support short term. Yeah, the dollar is moving up so far. Let me check the calendar to see what do we have ahead. See what we have. Is there any? We have PPI. So if producer prices are lower, that might be a good thing. Yes, wages are up. But producer prices, I still think the S&P, like big stocks like Nvidia, can still do well. They're gonna have to pull back to some degree, but I think they can still do well because their profit margins are still expanding. Now let's go to the hot sectors here. Chips. Okay, let's take a look at Nvidia. Let's do some TA. See what we got here. Here's your last all-time high. Now, NVIDIA is so stretched here. I mean, this thing is stretched from the all-time high. My expectation is, and that's a 48%. That's a nice reversal candle there too, right? You're getting a reversal there. You got the sell-off. If we look at the RSI, I mean, the RSI has been tremendously overbought for a while. Tremendously overbought for a while. So when these things fall, they do fall like a rock. So if you're going to get short, get the better risk reward if you're going to get short, but you better be careful because who knows? They can always come out with something, right? Make sure you know your levels. No go cost are yo high. Mr. Y93, make sure you read your sentences before you send them. It's kind of, I can't respond if it doesn't make any sense. How do you know where to put your support and resistance? Really good question. How do you know where to put your support and resistance? Well, let's do one example here. Let's go to the 5-minute chart. Okay. So 5-minute chart, and do I want to do it on this one? Well, here's my trading chart. Let's go to this one. So let's go to NVIDIA. Let's go to NVIDIA. Ignore the other 3 charts over here. Okay. Ignore these charts. We'll just look at NVIDIA. Right now, NVIDIA being up so much. Now, look, I am not saying you should short NVIDIA. You could get ripped. I think SMCI might get short a lot harder. There's a lot of things you could short, but let's just use an example here. Maybe AMD is a better example. Let's go to AMD. I want to look for that gap fill reversal. Here we go. Here's a perfect one. So there is an indicator. This was the previous day. It closed here at 172 for AMD. Okay. We closed at 172. Well, typically stocks that gap down, this is my favorite move, will gap down. If the overall market's rolling over, it's pretty clear inflation is up, we're going to roll over, we're up too much, positioning is stretched. You want that stock to go back up and hit the previous day close. You wanted those orders to fill right back up to the top because they're going to sell the previous day close. This is one of my favorite lines of resistance. You can see price could not hold above previous day close. What is this, a 30-minute chart? Let's go to about the 5-minute chart, see what it looks like. Okay, look at the 5-minute, gets above previous day close. Okay, tries to support, couldn't get there. Now it starts to fall. Now you drop this support. Now you drop lower. Now it goes to VWAP. VWAP is where institutions are going to buy or sell. It supports VWAP, looks good. Now it's starting to leak below VWAP, right? So AMD looks, now these stocks are still really strong. So I'm not saying go short this, but if you're trying to get a good risk reward, it's going to be at the previous day close after a gap down, because you have a lot of pressure to the upside. Now you can roll over. Okay, but we're not really doing a master class on technicals yet. We can look at KO 100%. Anyways, profit margins, no-go cost are yo high. Look at producer prices are the input cost to corporations. Producer prices are very low, sir. So actually margins are actually increasing, and the ISM new orders minus inventories also say that prices are increasing. Why do you think inflation is so strong? Because those costs are being pushed over to consumers, so profits are going into the corporations, right? Highest cost of transportation, insurance, healthcare, whatever it is. No, you're good, bro. I know it sucks writing on a phone. Just take your time, so it's more legible, so we can see what you're saying. PPI is Friday, I think. PPI, yeah, PPI might be on Friday. See, we got PPI Friday. Yep. No, tomorrow. We got PPI tomorrow. Valentine's Day, producer prices. We'll get that tomorrow. Then we got retail sales on Thursday. We'll see how that, if retail sales are hot, we might get rates, you might get the market continue to sell off, because rates will push up even more, because that means the Fed has to push rates back even further, rate cuts, right? So the market has to price those out. So we'll see how retail sales, if they come in soft, if retail sales come in soft, the market might bounce prematurely. We don't know. So you make sure you're tracking that data. But no, PPI is tomorrow. So we'll get producer prices tomorrow. Mr. Andre, what do you think about KO? Please advice. Yeah, we'll look at KO. Remember, we don't do financial advice. That'll be part of a package, but I will look at KO. Okay, so we're just looking at NVIDIA. Here's your high. Okay, here's your high. Here's your next high. If you do get short NVIDIA, what you don't want to do is hold anything above this level. This is the highest level, right? Because then it might break back out to all-time highs. So I would say, I wouldn't short NVIDIA though. NVIDIA is a monster. You got to be careful. SMCI, I'm gonna look at KO, bro. SMCI, I thought it was gonna be done earlier. Is this SMCI? Yeah, I thought this was gonna be done earlier, and it wasn't. Maybe this is it. You can see the multiple areas of resistance here for this semiconductor, about 798. Okay, maybe even 800. Put your stop at over 800, right? Maybe that's it. Anyways, we got you said KO. Let's look at KO. I think who's at not Pepsi, Coca-Cola, they got hit today. No, did they have good earnings? All right. So tell me your situation, Mr. Andre 23. What is your actual situation with KO? Are you trying to trade this, swing trade, investing, day trade? What actual position are you in? And I can tell you what I would do, or how I would view this Coca-Cola play, right? The famous Coca-Cola. S&B Capital has free trading info, so no one has to buy a course. Yeah, S&B Capital, that's probably one of the highest ranked. I think they're the best prop trading firm for sure. S&B Capital, although Send Tacos, the trading is very complicated, so they don't tell you everything, but they do have good. I would 100% say, hey, S&B Capital, go check out their YouTube channel. They are great, but that's a lot of information. It's you're gonna have to absorb a lot. You still would want a one-on-one. I'm not even advocating for myself. I don't do that right now, but S&B Capital is good if you want to start learning. Can you look at Lyft puts or calls? Okay, Lyft. So okay, I didn't get anything on Coke. So Coca-Cola just looks like a lower high. This looks like it's going to roll over. Let me take a look at these SMAs. Okay, let's do some anchored VWAP real quick from the lows. Maybe comes down back to here. Let's see where the RSI is at. It's dipping. The momentum's falling for Coca-Cola. I'm going to say the next support is around 58, maybe about 58. I mean, that's a big, indication of a sell right there. Price could not get up. I think they just had earnings also, right? So Coca-Cola, if it cannot hold 50, 58, but I don't know what you're doing. If you're investing it, that's totally different, right? Here's your anchored VWAP though from that last low. Lyft, LYFT. Why Lyft though? Why Lyft? Tell me why. Tell me why Lyft. Now, looking at Lyft, are we on the daily chart? Let's go to the weekly. Let's take a step back here. All right. Lyft on the weekly chart. It does look like it is trying to bottom out here. Now, again, overall market is weakening, right? If the overall market is weakening, then you want to be as patient as possible. Okay. Here's that next support. What am I doing? There we go. Here's your next support around $9. Okay. Could support here too. You could find something here. But with the overall market rolling over, look for the lowest bottom. Look for the best risk reward. Okay. So I'm expecting Lyft, if I were looking at it, to come back down here. But why Lyft? It has some momentum, I guess. It is trying to bottom out. Right. Here's your trend also with Lyft. Let's look at the trend. Oops. Here's your trend. 10 is always a magic number. 10 is a huge psychological number. Maybe 10. That's what I got for Lyft. All right. What else we got? Sold 45 shares out of my Nvidia. My 65 Nvidia is at 724. Average is 175. Congratulations, Hassan. I can't even say that word. I'm on TikTok. They ban you for everything. But I gotta watch out saying Tesla on here. Anyways, hey, congratulations, bro. That's big. What are you gonna rotate it in? What are you looking at there? Don't tell me you sold your Chainlink, man. I told you crypto's just getting started still. You probably did. It's all good. So we got Lyft. All right, let's see what else we got on here. Everybody selling courses, good Lord stuff free on YouTube. Yeah, you can find a lot of good stuff on YouTube, Santaco. Some people want a little more in depth or easier to break down. I'm building a course right now on understanding macro. I don't think there's a whole lot out there when it comes to macro. A lot of people are wrong. You're probably new on my channel, so I don't expect you to believe anything I say. Never believe anybody. Watch what they do, right? With the evidence. But anyways, yeah, macro course, understanding interest rates, right? There's a bunch of cycles. There's a risk cycle. There's a risk cycle. There's seasons in that risk cycle. There's a credit cycle. There's an interest rate cycle. There's an economic cycle. So how do you take a look at all those cycles? How do you evaluate them and know when the best time is to get long or to get short or to cover, right? And then there's technicals also. There's a lot of technicals out there. And you also have fundamentals. So yeah, you're 100%. If you look for the information, you'll find it. It just has to be worth it. DRKN. DRKN? Is this a crypto? I don't see it. Are you talking about DKNG? You're probably talking about Ooh, this thing exploded. I bet you're talking about DKNG. That's my guess. DraftKings. Hey, DraftKings is on fire. Okay. Yeah, this thing just broke out. Again, the overall market is not in your favor at the moment for DraftKings, but let's check the trend to see where the trend's at. Somewhere around here. I'd be very patient. You see that RSI is a little oversold. I mean, overbought. DKNG does look solid, though. This one is definitely in play. Retail sales are Thursday, 100%. Retail sales on Thursday. What else we got? Chainlink is gold. Been holding it. Added 100 more link. Look, our best play, again, and I don't advocate this for anybody new. We, just so you know, you can ask the people in the chat. We got long Chainlink. Okay, that was the only thing that I was like, hey, look, This has the best fundamentals in the crypto market. Around, we made a video when we got oh, this one shows you by market cap. That's what's up at $5. Okay, down here, $5. It is now at 20. So that did 400% so far, and it's still getting going. Now with rates up, it's going to slow down crypto. What up, Lance Harvey? I just saw that chats because they don't put Instagram inside of my other chat, so I have to look over there. My bad. Anyways, Chainlink's up a lot, so that's the only thing. Palantir, Chainlink, Tesla's not doing too well at the moment, but for long term, I think it's in a good position. I mean, the semis are exploding; those are pretty strong. But yes, added more 100 Chainlink. Chainlink's a monster. It's outperforming. It's leading Bitcoin and Ethereum. And we can go over the fundamentals, but it is a monster. I'll save that for later, though. I'm losing money with AG. Should I cut it or hope for a bounce? Well, I'm not going to give you advice because that is illegal, but I'll tell you how I would look at this. AG, what is this company? First Majestic Silver. Well, commodities in general. So here, let's teach you something. You want to learn. A lot of people just want to be told what to do, but you want education. You want to be able to decide and think for yourself, right? So when I go to my macro chart, I want to look at the commodity index. This is a commodity. Is there demand for commodities? Not really. Services are strong. Services don't really need or demand a lot of commodities. Manufacturing does. So when the manufacturing cycle ticks up, commodities will come back. But China's weak. Japan is okay. Europe is weak. So the commodity cycle is weak. So silver is not going to do that great yet. You need rate cuts. You need the credit cycle to pick back up. But I was looking for my commodity index. Where is it? I know I put it on here. Where's that commodity index? Don't tell me it disappeared. Thought I reorganized all this. Well, I mean, you could just look at gold futures. I could have sworn I put the commodity index on here. Where is it? Huh. Well, here's mining. Yeah, all the commodities are down. I'll just say that. All the commodities are down. I thought I had the commodity index on here. Need to get it together. I thought I'd saved it on here. Did this thing get rid of them? Oh, well, nat gas down, getting destroyed, right? So natural gas is down. Why? US is the biggest support of LNG to France is the biggest. Okay, that doesn't make sense. I just read this today. France is the biggest buyer of US natural gas. I'm telling you right now, there's too much supply. If there's one concept you want to know, when there's more supply, prices fall. When supply overcomes demand, prices fall. There's a lot of supply for copper, for natural gas, for wheat, still falling, right? Those are not commodities. Where's oil at? Oil too. There's enough demand. Oh, come on. This COVID thing messed up this chart. It goes all the way to zero. Remember, oil went to zero during the pandemic. Anyways, yeah, there's just not enough supply. Now, again, if the Houthis keep disrupting, if there's more disruptions in the Red Sea or anywhere else, well, you're not going to be able to move that supply to the places that need it. So you get a supply constraint, supply side inflation, right? It's not that demand is so crazy, it's that supply falls. And if you can't supply it, well, the people selling, they still have to make their money, so they increase prices. So we just don't want oil to go higher. But in general, whatever you were looking at, AG, I mean, it you got to cut your losses at some point. You got to cut your losses. I mean, that's what I would say, because it just dropped this last support, $4.24. Always know why you're getting in something. What is the narrative, right? What is the narrative? You want commodities in general to go higher. If that is the case, you want to see the manufacturing cycle start to pick up. And right now it's weak. That's more of a macro thing, which is why, again, I'm going to have that course out. I'm not going to say when, because I'm trying to make it very detailed for beginners and make it complex, very easily digestible and visual. But this is all about the macro manufacturing cycle, and it's just not strong yet. JEPQ. Oh, okay. JEP covered call. I'd be careful with those covered call ETFs. Ooh, it looks good though. This is a covered call ETF. I know one of my friends was looking at it. Premium covered call ETFs. Well, it's fixed income. This is basically fixed income. I'd expect it to actually weaken if inflation, moves up, but you got to be careful because this is a lot of derivatives, and it only takes one drop in collateral for these things to fall, one bad call. So I wouldn't mess with it. But I don't know much about it. I haven't really done a deep dive, so I don't have too much to say. But good luck. If they do yield well, what is the yield? I wonder what the yield is on it. JEPQ. I know I made this darker so you guys can't see the ticker, but I guess it's one of those covered call ETFs. Yeah, just be careful. I don't personally trust it based off my instincts, but it depends how you positioned, right? It all depends. Thoughts on Nat Gas bottoming at 150? Shoot, I wouldn't, Max. I wouldn't bet on no bottom. Let's look at the technicals. And I don't know if I have the same Nat Gas as you. I need to get this thing. Oh, here it is. Here's the commodity index. I had it at the top. This is the commodity index. It doesn't look that great on this scale. And this is mostly oil. Obviously, it looks like the chart of oil, but you want to look at a line on this one. Commodity index has been falling. There's not a lot of demand. And it's not because there's no demand. It's because there's so much supply being produced for commodities. So, this needs there's a commodity cycle, and you need China's economy back expanding. It's just not in Europe. You need China, just not happening yet. So that's a commodity index. You said Nat Gas though. Let's see, Nat Gas. Also, I'm live on YouTube. If you guys want to jump on there and throw in your tickers, I will look at them for sure. I might miss it on TikTok because the algorithm just pushes you up and up and up. Not the algorithm, the chat pushes you up. It's annoying. So if you want me, you could just jump on, throw your ticker, and then go back to TikTok if you want. But anyways, you said Nat Gas. See if I can find it here. There it is. You said 150. Now I don't know where that is on my chart because I'm looking probably at I'm looking at Nat Gas futures, but I would say I don't even know. I would not try to guess this. I would not try to guess natural gas at all. These things can reverse split where it just keeps dropping, and it's happened in the past. They reverse splits and it never, the price jumps, but it's not real. So me personally, not messing with it. It's the 2020 low. Yeah, I wouldn't mess with it. I would wait for there to actually be a bottom and see the trend break on that gas. I don't want to see the trend break. I would want to see some more volume to the upside. Yeah, I wouldn't mess with that. It can just slide overnight. I mean, it looks like it could pop, right? But no, I wouldn't mess with it. Not yet. Wait till it bottoms and shows consolidation and then breaks out and then retests. That's my view, Max. Do whatever you feel like though. Hood just had earnings, right? What else we got on here? Chainlink is doing great. I'm terrible with going back on the. Oh yeah, Ronnie, you're killing it with Chainlink, huh? Too cool off the real estate. The rates may need to be adjusted. I held ARM calls from yesterday, had 3K profit, now down to 160 left. Yeah, ARM was up so much. It was up so much. Oh man, when this thing made this big move, boy, people get greedy. Do not get greedy. It's already up too much. You got to take profits on that thing. You got to take profits. You got to survive. You can't believe everything's going to the moon. It already did. I mean, it already went to the moon. But let me see. Intraday. I remember I was looking at it intraday and it just kept pushing. And it had just this big blow off top. And yeah, ARM, I mean, man, I don't know what to say. I can't explain everything in if you're in profit to a certain degree, you can't be greedy. Not everything's going to go to the moon. So especially on the options destroys you if you keep holding it. The theta will eat you up. I'm just here to help you out. I've made a lot of mistakes in my life. VIX 17 calls, March maybe 1.5. I'd be careful with VIX. I don't know if VIX can move up that much. I know people get excited about the VIX, but where's the VIX at? I'm sorry. I'm gonna get to. I know I keep skipping on Hood. We'll come back to the VIX. Let's look at Hood real quick. Robin Hood. Ooh, this was that big gap. That's why I have this on here, huh? Let's go back. All right, so look at Hood. Hood is looking good. Earnings today. Was it today? Did we have earnings today? Is that what it was? Earnings today, huh? Well, you got a bottom here at 1050. It didn't react too bad. Let's just get rid of this. It didn't react too bad to the downwards market. I'd still wait for it to come down. It looks like it's trying to recover. Let's see what that price. This has some strength to it. See what's looking at intraday. Looks like it has some strength. Some buyers stepping in. It's still short though. Look at this gap down. Gap down. Try to fill the gap. Can't get up. Can't get it up. Needs a blue chew. So I'd be careful there. But it does look good. Maybe for it to break this trend. Maybe we need to break this trend. But here's the downward. Here's the lower gap at 1150. Let's zoom back out. Let's go to that weekly. It looks good though. It has some like Hood is starting to look really good. Hood is looking really good. Let's see. Obviously, about 1050 is a good level of support. Does it come back down? I don't know. But what it could do is start to form a wedge here. This is what I would expect is to see. What am I doing? There it is. To see maybe this something like this. Right? It kind of did it back here and then it broke down. So maybe some type of wedge around this area. And then once it breaks out of this wedge with good volume, the overall market is starting to bottom and then it finds support, high or low. I would get long somewhere around here if I was looking at Hood. But yeah, look for that wedge to form. Don't chase it. You need some consolidation. And then once it gets above the highs, I mean, this thing is probably going to rocket. I don't know, because a lot of it is Bitcoin too. A lot of it is what Dogecoin trading, even though Dogecoin is crap right now. It ain't going nowhere. We'll see how that plays out. But you were asking about Hood earnings also. I didn't look into Hood earnings. Honestly, I'm not really looking too much into a lot of these earnings. I don't know too much. I would check out Emit. His name is Emit. He does a lot of Palantir content. He'll break down the earnings really good for you. I don't know. I don't have all the answers, but I'll find somebody who does. So check out Emit. He has I think his channel is literally called Emit Investing. So he'll know more about the earnings. I usually only key in on the earnings of like Tesla and very specific stocks. I'm doing more macro right now, so I need to expand my horizon at some point, but you only got so much time in the day. Let's see. VIX calls. SPY keeps moving up. Upstart. UPST, and then VIX, right? Upstart. Upstart is forming a big wedge, but I'm still very suspicious of the business. That's a big wedge right there. But as far as I know, this is a financial. I'd be a little careful with it. That is a nice wedge, though. It's not ready. It's still in consolidation. Still in consolidation zone, right? Maybe gets a little tighter there, and then once it gets above this trend, and maybe supports this previous level, it might even gap up. These things are hard, but you definitely want to wait till it has a little more consolidation. It's starting to build a base here. Okay, Upstart is starting to build a base there. A little base right there. You can see it between what, 38 or not 38. What is this? Yeah, it is about 38 and about 30. I'd have to look a little deeper into this price action. Let's see. Yeah, well, probably above 38, 37, 37, 38. Be patient. Be patient. Looks like it has a little more room to consolidate there for Upstart. Chainlink's on fire, 100%. What up, Kiki? BMR is the biggest story this week. Video tech working with Nvidia. Oh, is that who Nvidia is working with? BMR. It just went straight up. Yeah, people are gonna chase this. People chased it and got burnt. Guarantee you. Don't get caught up in the hype when or you better know what you're doing if you do. Yeah, I mean, this was just based off of sentiment. This is just, dang, did this thing just barely wait? What is this? Is this an IPO? Oh, never mind. It gapped up. Okay, I was gonna say, no way. All right, so big gap up. It's up 1,000%. Oh yeah, you better be careful here. Gapped up, sold off. Momentum might be done here. Yeah, this was. I mean, these are those penny stock trades. I wouldn't mess with this stuff. This is like a casino right here, right? We don't know what the fundamentals are. It's all based on hype. It's basically a meme trade right now. They don't have I almost bet they don't have any fundamentals. But hey, if you I'm not gonna say it. I'm not gonna say it, man. I'm not gonna say it, Doifer, because a lot of people will go chase this and then just get crushed. So that's a tough one. Because this thing could break out of a wedge. Look at this gap. I mean, look at this gap up, and then just like this thing could gap down on you like 10 points. So you, nah, I'm not messing with it. That's a dangerous one right there. Got to be an expert there. Mars, Pluto, Theta. Earnings is after hours today. Hood. Oh, it's after hours today. Okay. Hood on daily if it breaks. Nice. Okay, well that's actually interesting. You got Hood coming up. As a matter of fact, you know what? Maybe we'll look at the Hood earnings. You guys want to see Hood earnings come out? Do some live Hood earnings. Let me set that up. Oh wait, no, I need to do it on here. Let me set that up really quick because it should be coming out in about 5-10 minutes. So let me throw on CNBC. Hopefully it doesn't freeze on us. Mega caps lead the decline. Yeah. So this is Hood. All right. What else we got? Not enough risk reward for me, but Hood looks solid. Is this Robinhood? Yeah, we're talking about Robinhood. What happened to the dog? Datadog, Jeremy, ETH, and Solana. Who wins? ETH, of course. ETH. Solana's having issues. Ethereum is a monster. Solana is going to move more percentage wise, but it's competing against Ethereum. It'll probably survive. But I'd stick with Ethereum. Like if you had to like hodl something, I'd stick with Ethereum for sure. I mean, Ethereum is setting up pretty good. Bitcoin's been dominating for a while. Yeah, Bitcoin's been dominating for a while. Crypto's about to rip, in my view. Ethereum's almost out of this. Look, when Ethereum moves, I mean, the next target is 3,300, 3,200 for Ethereum. Ethereum is looking good. If it doesn't, because rates go up, dollar goes up too quick, probably come back down around, 2,200, back to that anchored VWAP from the last low, which is also the previous support. We'll see. But I'd go with ETH over Solana. Solana will outmove ETH, but you would have to have been in Solana a long time ago. At this point, you never know. Just like XRP, it didn't even move yet. BMR 14.8. VIX had bottom in December. VIX, you got to get lucky. That's like insurance though. VIX is basically insurance. That could have been the move. Those are people just, it's not like inflation is trending back up or the Black Sea, or it's just insurance. Insurance spike, come back down. That almost tells me that the market might just keep grinding up. Here it is. What to watch for: trading activity, monthly active users, UK growth, cost cutting, profitability, crypto volumes. Crypto volumes are going to probably drive Robinhood higher. Crypto volumes. A COD goodbye here. ER soon. A COD. A COD. A card pharmaceuticals. Oh, I'd be careful with these guys. A COD pharmaceuticals, because I mean, these are YOLO plays. The reason I say that is because any kind of pharma, big tech, not big tech, but any kind of biotechnology, it's hard to understand the research. You're really hoping and betting that they're interpreting it correctly, right? You have to watch price action because, I mean, come on, let's keep it real. These are based off of trials and studies and regulation. It's really tough. I like CRISPR, but I know CRISPR. I don't know what a COD is. A lot of people are like, oh, yeah, this stock will do good. Well, what do they do? What does a COD do? What is the catalyst? What is the edge? What did the balance sheet look like? What regulation does it need to pass? CRISPR is breaking out, but CRISPR has earnings today too. Uh-oh. So, oh man, it's running up before earnings. But yeah, CRISPR is probably my favorite gene editing play. Except I'm not advocating for it. It just, you don't want to chase this thing. The time to get it would have been when it was getting crushed. But then nobody knows, hey, are they going to get FDA approved? They got the FDA approval, but they ripped before the approval. This is a buy the rumor, sell the fact. Now it's buy the rumor that earnings are going to be good. We'll see. It might gap up. Who knows? It might gap down. You never know. Robinhood connected to MetaMask. That's huge. That's huge. All right. So market just closed. Robinhood earnings should be coming up soon. Do you think we're in a bull market run now when Bitcoin has been pumping? Oh, heck yeah, we're in a bull market. We're definitely in a bull market, your residents. The bull market has just got started. Like we haven't even got to all-time highs. Once you break out of all-time highs, then the bull market is halfway over for crypto. And then you get the second half. But we need the halvening still. We still gotta get to the halvening. But yeah, we're still in the bull market, bro. We haven't even hit all-time highs. Ideally, look, Bitcoin is above the 50, the golden pocket too. The Fibonacci 51 retracement. It's above that. So it's looking good. Right? We're above that level. I mean, it didn't break out of this trend. After today, I might be a little skeptical. So we look at Airbnb, Instacart, Lyft, Robinhood, Zillow, MGM Resorts. Okay. Bitcoin could come back down though, obviously. Right back in this trend and then go up. I don't know. We'll see. Inflation wasn't terrible. We'll see how rates play out. But yeah, we're definitely in a bull market. We're holding this previous level. So your next resistance is 52, and then boom, you jump right to like 60. So we're getting close. We're getting close to all-time highs. Do you think we're in a oh, I already read that. A calm ER. I'm not sure what that is. A calm ER. A calm technologies. What is this? This is a Japanese stock? No clue what that is, bro. Stock sync on hot inflation data. QQQs. Let's see what the Q's looking like. Q still holding the trend. Man, a lot of people don't like crypto, huh? Crypto is still warming up. Still warming up here. All right, so Qs maybe come back to 413. VWAP. I don't know. I don't know where the Qs come. Looks like they're trying to find support on the trend. So the Qs are still supporting this uptrend. Dang, had a lot of green volume today. We really didn't even get to the chip stocks. Let's take a look at them. So yeah, Nvidia looks like it's going to sell off. Right, looks like it's going to roll over, but we'll see how the earnings go. SMCI, this thing is up so much. This is going to be a nasty. Look at that RSI. It's at, what is this? 90? 95, bruh. I mean, if you can get lucky, it's expensive. These options are so expensive, but if you can get lucky, I wouldn't bet on it. People are going to buy puts probably about 2 months out because this pressure has to come down rapidly. So there'll be some nice puts on ARM pretty soon. Typically, the easier play, not trying to top ticket, would be what is this? The daily chart. Let's go to like the 30-minute. An easier play would be a big gap down, and then it runs up, makes a lower high, boom, roll it off that level. But it's finding a lot of weakness here, for sure. What do you? Okay, let me see. I think I know what you're saying. I'm gonna say 150 your resonance. Total crypto market cap. I don't know. People throw it around. I have no clue. 10 trillion. They throw around 10 trillion. I have no clue. I would say, let's see. Hold on, let me see. INTC, Qualcomm. You know who's been vertical is this thing also. Avgo. Just want to look at some of these plays that I think are going to be nice shorts. Bearish divergence. Very expensive though. These are very expensive. TSM slowing down. ARM, obviously. I mean, look at that. Look at that candle. That's a sell side. That's a kill candle right there to the downside. Anyways, you said total crypto market cap, right? Let me see. Crypto market cap. Where's the total market? So we're at 1.8 trillion, 3 trillion. I'm going to say 10. I don't really know though, to be honest with you. I'm going to say 10 conservatively because we could see Bitcoin go to this cycle. Yeah, maybe 10, maybe about 10. Maybe about 10, bro. You never know. You never know. See how some of the Uniswap still hasn't really moved. Aave. Now here's what I'm looking at. XRP versus Chainlink. Chainlink destroying, eating up XRP. Chainlink Bitcoin. Okay, almost breaking out. You got that reverse head and shoulders. Almost there. Boom, boom, boom. Chainlink versus Bitcoin. Chainlink versus Ethereum. Same thing. Need to get over this level. I think this next move for Chainlink is going to be a monstrous move. Okay, we got earnings alert. Who is this? Oh, it's Robinhood. Okay, all right, let me move this over to YouTube if you guys want to see Robinhood earnings. I think you guys should be able to hear it.
So it's a surprise profit here for Robinhood in the fourth quarter and a pretty big increase in deposits we're seeing. So it was 3 cents per share on that EPS number. Street was expecting a loss of a penny. That was on revenue of $471 million. Also a beat there for revenue. Net interest revenue, a big driver of all of this, up 41%. Transaction-based revenue, that's essentially those fees from trading, was up 8%, primarily driven by cryptocurrencies, which saw a rebound in the quarter. Monthly active users up from the prior quarter. They slowed about 4% year over year, but revenue per user, that's key. It surprised at $81 per user, about a $4 beat there. Operating expenses were down 17%, so some of the recent cost cutting in action there. And then on deposits, guys, Robinhood saw $4.6 billion in new deposits for the quarter. $3 billion of that came from transfers from other brokerage firms. So they're looking to steal market share there. I spoke to CFO Jason Warnick. He says a promotion that they were offering, basically matching 1% on transfers, resulted in that bump. He said there was an average transfer price of about $100,000. So a higher income trader there that they're pulling over. He said positive net transfers they saw from every major brokerage firm. He called it encouraging, says that they've really rounded out their product selection, becoming a choice for folks with larger balances, which is not the reputation as how Robinhood really started. Question of the day, though, guys, rate expectations. He didn't call when the Fed would cut, but he did say a falling rate environment is good for asset growth and trading activity. He thinks that 2024 will be the period where rates move from a headwind for their business into a tailwind. No revenue guidance. But guys, we also have CEO Vlad Tenev tomorrow coming up on the exchange, broadcast exclusive, 1 p.m. Eastern. And
well,
guys. Back over
Oh,
to you.
oops.
All right, looking forward to that interview. Kate Rooney, thanks. With shares up something like 9% right.
Well, yeah, because they're charging 7% margin. And as soon as the Fed cuts rates in 2024, margins are only directed to go far. There goes Lyft, beats estimates. I don't know if anybody's watching Lyft. Well, and Robinhood has a lot of upside, I think, when it comes to what they're trying to do. They have retirement funds, 401ks, Roths. They are innovating. They're innovating. So I like Robinhood. I'm not invested in it, but I use it. I've watched it over the years. They actually have an options tracker. It tracks all your options performance now. So they still need to fix a couple things, but it's getting better. It's definitely getting better. So Robinhood looks like it's doing well. Yeah, that guy on Instagram, your SSFH or your FX, just send me a message, bro. Send me a message. Let me answer any questions before we go. I mean, we're done. We're done with the show. Inflation is stickier, but it's not reaccelerating. You know, they're fooling you. It's not reaccelerating. It's a little stickier. It's a little stickier. The key here for inflation is to watch where bond yields and where the dollar goes. This is where the market is telling you is, wait, what is this? Oh, intraday. This is going to tell you, you know, what's happening. The market right now is believing that interest rates. Yeah, the dollar's telling you interest rates are going higher. The interest rates are telling you that growth or inflation is going higher. So you need these to slow down until we get the retail sales on Friday. We'll probably do another stream on Friday for sure to recap. So watch rates, watch the dollar. It's going to be in your favor. Whoa, it ticked up again. Rates are surging. I'm off right now. I'm taking a step back, especially if I'm going to go long. Anyways, let me hear your questions, concerns. Are you streaming on Instagram and YouTube at the same time? Yes, Instagram and YouTube and TikTok. That's why I don't have the best show. Excuses, huh? Nobody makes excuses. I'll get better at it, but right now I'm focused on building that course, right? Macro cycles, risk cycles, technical analysis, fundamental analysis, how to read the central banks, how to read the economic cycle. I don't think most people really know what to look at for the economy. They just kind of see the things come out, right? It's a lot easier to predict when you know what to look for, when you actually know what to look for, right? And this is also going to be some history on how the markets move, inflation, how to read all that stuff, how to digest it. So I'm working on that in the back half. Hopefully I have a good product here. Appreciate it, Kiki. Thank you. Shout out to you. Shout out to you for staying for the support. I appreciate the support. But yeah, I think that's all we're looking at here. Inflation's a little hotter than expected, not too much. It was 0.2 and 1/10 hotter. And it's sticky. It's sticky, but the Red Sea, it's all coming from the Red Sea. Transportation costs, insurance, a little bit of insurance, a little bit of healthcare. In general, we need bond yields to roll over. You need bonds to pick back up. So I'm thinking we might correct until NVIDIA earnings. I think NVIDIA earnings are going to be a big key here. We have about 7 days maybe till that next big move. If not, I mean, we'll see. We'll see how things grind. But other than that, free course? No, not free course. Definitely not free course. I'll have some free stuff though. I mean, I'm going to start a newsletter. I'm going to put some stuff together. I've been doing information. I've been doing this for a while and I've sold nothing to anybody, just mostly, giving the information out here. So let's just put it this way. Your resonance. If I can save you, if you paid for a course, I mean, I'm not trying to sell you anything, but you know how it is. If you paid for a course and you made that money back in like a month or two, I feel like I did my job. It becomes free. It becomes free at that point. Anybody who invested, I don't want to say this, but Chainlink, you made way more, right? A lot of free information based off that. I pick my spots. I don't sit there and say, buy this, go this. I don't say that. I pick my spots exactly where they should be, and you'll make your money back. Price for the course, I don't know yet. Your resonance. I'm gonna finish it. I'm not focused on the marketing or any of that. I'm focused on making sure it's the best possible I can build, not just some fast AI stuff where I throw it together. Very simple. I want it to be simple, understood. A lot of courses are too complex. They just throw a bunch of stuff at you and then you're like, what? So I'm making it so simple that people I know they don't know anything about it, that they understand it, right? So I'm using other people who have no clue how things work to make sure that it is understandable. And then it gets more complex the deeper you go into it, for the technicals, for the macro, right? Reading the cycles and all that. So that's kind of what I'm focused on. If you're wondering why I'm not streaming as frequently as I usually do, because I am doing that as much as I possibly can. But anyways, I do appreciate you guys who are on here for the support. Again, message me if you have any questions. That's what we're looking at. Inflation, the market's probably going to pull back for a couple weeks, maybe a month, maybe going into March. We'll see how things are, consolidate. But we're in a strong bull market. This is a strong bull market. The economy is coming back. Okay, it's going to have bumps, but the economy is back. Your biggest risk is oil prices spike above 80. That's the biggest risk, as always. Other than that, we're still in the uptrend, right? S&P 500, we're still in this big uptrend. And I'll also say this, let's go back in history. This is part of the course, right? If we go back, I think we're starting to look a lot like we did in the early to mid 90s, right? That was the tech boom. That was the tech boom. So let's take a step back. Look at this market. Oh, this is SPY. I got to go SPX. My bad. Okay. So if we go back to early 90s, this is what I think the setup looks like. You had kind of a bear market. This was the SNL crisis, right? SNL crisis, blah, blah, blah. It was a little crisis. And then you had the tech boom. And what is the narrative right now? It is artificial intelligence, more for less, productivity growth. We're looking at productivity growth. We're looking at profit margins actually moving up, which means debt is a lot of the growth. But if you get productivity growth, margins expand. Companies retain more money. They retain more revenue. Yes, your wages are never going to catch up with inflation. That's why it's so important to be invested in the right things. What are the right things? Well, I can't really tell you that. I'm not a financial advisor, but eventually you kind of know. We talk about it all the time. This was the SNL crisis. You had low oil prices. You also had fiscal dominance. Part of the reason the bull market's been so strong because of fiscal dominance, meaning the fiscal authorities, the White House, the US treasuries have been stimulating like crazy. Is it inflationary? Yes, it is to some degree, but not if you have more supply of labor, which actually produce more than they actually spend, or they produce more things. That's how an economy grows. You produce more goods and services. So if we can produce more goods and services, and technology, AI factors into that, you're going to get just a strong bull market for the next, I think, till 2025. I don't really see any big risks. Like a lot of people tell you, pending recession. Look, the Fed will step in. The Fed's balance sheet will come and step in as it has before. Here's the Fed's balance sheet, right? It is falling at the moment. Well, guess what? They cannot keep this up. They can't keep draining the balance sheet. At some point, this balance sheet is coming back up. At some point in the next 6 months, they cannot keep up with the interest rates. The Fed's going to have to cut and re-stimulate. This is basically a credit card. This is a credit card for the capital markets. That credit card was moving, right? During the pandemic, the credit card got turned on. It got turned off halfway through 2022. They turned off the credit card. This was the banking crisis. Boom, the credit card turned on, turned back off. But you also have this credit card, which is due to run out. This is the reverse repo. This gets very difficult. So I'm not going to go too technical into this. That's what the macro course is for. So you understand these things. And then when I do lives that are complicated, you kind of can keep up. You say, oh, okay, yeah, I know what this is. I talked about this, right? I used to be a teacher. So it's going to be broken down in a way that is educational. Here's the Fed's liquidity. This is the Fed's liquidity indicator. It's called Fed net liquidity. That thing is rising at the same time. So if we get a slowdown, another reason I say this is a strong bull market, if we get a slowdown, okay, in growth, which I do expect February, March, right? Credit card debt's high, defaults are up, commercial real estate. When there's a slowing recession, you're told the opposite by a lot of people. When things slow down, actually monetary policy turns up. Actually, stimulus and support start to boost the economy back. So we should be moving higher. I would like to see a nice, healthy correction back to all-time highs, and they will come and step in. big money will come back. They're going to come and step in. But anyways, that's all I have for you guys. Let me see, make sure I didn't miss anything. I think crypto is the best opportunity here. I think it is the best opportunity. When do you think it'll be ready? You know what I said last time? I said the New Year's. I was wrong. When do I think? I'm still finishing the macro part of it. The macro part will be done. I think it'll be done by March. The technicals might take longer. So I would say, I'm going to say April, February, March, April, at the latest summer. I know it's long, but that's my time. I don't know. I really don't know, bro. I don't know. I'm just trying to make it as quality as possible. I'd rather spend more time and make sure it's quality than try to rush it, and then try to rush it and try to sell it to people. So I'm going to take my time on it, make sure it's good. Until then, I'll give you as much value as I possibly can when I do the lives. You know, I'm doing the live so that you guys can ask questions and I can tell you what I'm thinking. AI boom. Exactly. AI boom, productivity boom. Will it be a video course? Yes, it'll be a video course. So it'll be a video course. So I'll go through the slides and I'll be live. And then you'll have the opportunity. Also, the newsletter will be attached to it. So you should be getting a free newsletter if you buy the course, free newsletter. And if you like the newsletter, right now the newsletter is free. So I already have free content. I just sent out a newsletter last week. So the newsletter is already free. It's in the link in the bio. But anyways, yeah, it'll be a video course. So I'm going to try my best to, make sure it's quality. And I'm putting in macroeconomics, economic cycles, speculative risk cycles, interest rate credit cycles, right? All that stuff, the business cycle, technical analysis. I don't know if I'm going to throw in day trading because day trading is another monster. I might do something different with that, but for the most part, macro swing trading, stuff like that. Can't you drop it in 2 parts, 1 macro, 1 TA? I can do that. I'm thinking about that. Hawken Landas. I can't even say your name, bro. I don't even know if you're a bro or a woman. I have no clue because you guys can't see you guys, but I might drop it in 2 parts. I'm not sure yet. I haven't thought about the marketing yet. Again, I might do a macro. Maybe some people don't want to see TA. Maybe they just want to see, technicals. Maybe they just want to see macro. I don't know. But I am focused on the macro. I'm going to let you, keep you up. Focus on the macro, then the technicals next. I don't know if I'm going to do day trading. Fundamentals also. Fundamentals are important because that's how you choose your investment. Everyone can invest. And the fundamentals is what you get into. What is the vehicle that's going to build your wealth? What is the vehicle that's going to build your wealth, right? And that's also very important. The macro is, what is the environment? What season are we in? What is the climate? Are we in spring? Are we in summer? Are we in fall? Where are we exactly? Right? The technicals are, well, how do I take advantage? The technicals tell you when and where to get in and when and where to get out. So that's as simple as I can put it. So we don't have to wait that long. I see what you're saying. So you don't have to wait that long. Maybe I'll do the macro part. I'm going to keep that in mind. You guys give me the feedback. Maybe I'll do that. I'll do the macro. And if so, the macro should be ready. Let me see, February, March, April. I think I could finish it in April for sure. I can finish the macro in April for sure. So maybe I'll do it in parts, and then I'll do something like, hey, if you do get the macro course, then maybe it's cheaper to add you can add the other pieces on. We'll see how it plays out. I don't know anything for sure, but anyways, again, appreciate you guys, and stay blessed. Make sure you eat healthy, lift weights, take care of your health. Okay. Take care, get good sleep, stay focused, say no. If you're trying to get better, whatever it is, stay focused, say no to things, and stay blessed, guys. Thank you.